Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe. So good morning, ladies and gentlemen. Good Monday morning, ladies and gentlemen, and welcome to this special edition of the Coffee with Craig show. I'm here with Szymon Ostrowski, President and CEO of Newport Logistics Fund. Szymon, welcome to the show, and thank you for joining us.
Thank you for having me. Hi, Craig. Hi, guys.
Good. I'm glad that you had time to meet us because I understand you're traveling all the time in different countries around Europe, looking for locations and talking to investors and just working on this second fund.
Correct. You know, we just had Expo Real, which is a big event, obviously, for the real estate industry. And besides that, of course, yes, we are raising our second fund,
right.
And we are looking for investors all over Europe. So clearly, we need to be traveling a lot. And also, one thing is investors, but the second thing, we are also in the second fund, we are looking for projects in Western Europe. So we need to travel for this as well.
Right. Well, tell us first of all, this is the second interview we've done together, but for our let's say our viewers that don't know you quite so well, first give us a minute, tell us a little bit about yourself, and then we'll move on from there.
Yeah, so Newport Logistics Fund, it's a Luxembourg-based fund. We are focusing on developing warehouses, logistics warehouses in Europe. The first fund was established last year in April. The timing was not ideal from the point of view that the war just started.
Right.
However, we started to raise the first fund. We actually raised in 10 months 50 million euro in our first fund, and we also deployed this money in 3 projects. One is in London,
right,
just outside of London Heathrow. Second one is in Amsterdam. And the third one is in central Poland.
Tell us a couple of words about how the fund is going in the sense. How are the projects going?
Yeah, so the projects in the first fund are doing very well. As I said, these are the 3 projects from the first fund that we did.
Right.
So we raised the money in 10 months, and we also deployed the money in 10 months, which is quite important because our promise to investors to build quickly, lease out, and sell the warehouses, because we are a development fund. We are not holding those assets. So basically, in terms of the project in Poland, the first warehouse is already built and leased out. It was actually leased out to DPD, the logistics company,
Sure.
and it was leased out last year, and it's fully built. We've got the financing secured for the second phase. We are going to start building the second phase warehouse in this project in Poland at the beginning of next year. In Amsterdam, we are finishing securing the financing, and all the permits are in place, and we are going to start as well building. And London, this was actually a very interesting project because not only because of the location of London Heathrow, which obviously is the superb location, right, and this particular warehouse is going to be a last mile logistics warehouse, but this was a brownfield because, as you know, Craig, in Western Europe, it's not that easy to secure pure land.
Yeah.
So very often you need to buy the land with an existing building.
Right.
We turned it down, the building.
Okay.
We've got all the permits, all the zoning, and we are and bank financing, and we are starting this year to build a super modern, ESG-friendly warehouse in London.
Right. Well, by Heathrow, last mile sounds very profitable as well.
Yeah, I think it's a very good location. It's a very good location, and I think it will be a very good project for our investors.
Right. So from the first fund, you obviously have a lot of experience in Western Europe, and great to be in Amsterdam and probably London, some of the best 2 places probably for logistics. So let's talk about the second. So first fund, big success. Second fund now you've decided to raise, and you've been working on it for, I think last time we talked, you were just finishing the first fund, and you were working on the second fund, or we're going to start launching the second fund. So
correct. So when we spoke last time in our office, we were just finishing fundraising for the for the first fund.
Right.
This happened a few weeks later,
Right.
to be honest. So probably doing the interview really helped us with the fundraising. So this is done. We raised the money in the first fund and invested, as I said. The second fund was launched in spring this year. We are raising 100 million euros, so doubling the size of the first fund. We are already very much advanced in the fundraising, and we have also already invested the money into 2 projects. This is actually first time I'm mentioning it, so we can call it an announcement on Coffee with Craig show.
So we should break here and collect money for everybody watching before we announce it. But no, I'm joking, of course. But yeah, definitely tell us about. So you've already got 2 projects on the go from the second fund.
Correct. So the second fund we are raising. It's doing very well. We are focusing a lot on money from Western Europe. We are focusing on family offices, institutional investors. So we are kind of stepping up the game in terms of the fundraising.
Right.
And we did already, as I mentioned, we did already 2 projects. So one project is in Austria.
In Austria, okay.
We bought the land here. Very good project, very nice location. We are talking 40,000 plus size of the warehouse. Second project is in France.
Okay, very nice.
By the airport, by a big cargo airport terminal.
Okay.
So these 2 projects are, let's say, the backbone of the projects that will be coming in the second fund. We will do 3, maybe 4 projects depending on the pipeline, but we are focusing only purely on Western Europe. So there will be projects only in Western Europe. So in the first fund we had this Polish project, as I mentioned, but in the second fund, purely Western Europe. We also, besides of the France and Austria that we already acquired, we have in the pipeline project that we will be buying most probably in December. We will be finalizing in the Netherlands, on the border with Belgium, and another one in Sweden, north of Malmö airport. It's a gateway to Sweden, in terms of logistics, which obviously Scandinavia, it's a very rich country, and the need for the warehouse is also very big. We would like to also in this second fund do something in Germany. Germany, it's a very, very interesting market, and we see a lot of potential, especially that a lot of investors are looking for assets there.
Right. And, I think Germany also, very good market for logistics. And even just as you mentioned, Expo Real was last week. And actually there was quite a lot of German investors on your stand and a lot of developers there as well, looking at different projects. So.
Yeah, I think, Expo, it's a good example how basically the industry is looking. And of course, we can say that generally the real estate market is having some more complicated, let's say, time. However, within the real estate, warehouses are doing very, very well. And I think one of the reasons is that this asset class is really much needed. The project that I mentioned in the second fund in France that we are going to do, that we acquired, the vacancy rate in this area is 0.
Well, that's good.
It's hard to get it wrong with such a parameter. But also in terms of warehouses and in Western Europe, supply chain issues, e-commerce, which is growing slower than during pandemic, but still we are talking double digits growth. And the war in the Ukraine and the big factor, which is nearshoring, friendshoring, however we will call it, which I think for many years it was a slogan that was not really happening.
It sounded good.
But now it's actually happening because we had recently Intel doing the semiconductor production in Poland. For example, they are doing also a semiconductor facility in Germany. And only for the semiconductor industry, there is estimated 10 million square meters of warehouse that will be needed in Europe in the next 10 years. So I think these factors are kind of showing that the warehouses are doing very well.
Right. Well, even I think with the like you said, semiconductors. I mean, even in the toaster I just bought has a semiconductor in it, and I have to download some app to make it work.
Yeah.
So, that market is only going to explode or continue to grow. And if you're a manufacturer, better to have your products here in Europe, either Western Europe or Central Europe. So, tell us about. We're talking to what can investors expect? What kind of returns and what kind of returns are you, let's say, expecting or guaranteeing, maybe not guaranteeing, but expecting? And what is the sustainability of these? How do you see, because some of these guys are a little bit more long-term, right? Building a warehouse, getting leases, and then turning it over there. So what can investors expect from you?
Yeah, so definitely what investors can expect from us is top quality and top locations. I think that, as I described from the first fund, London, Amsterdam, now Austria, France, we are very much focusing on targeting a very good and the best possible plots with a low vacancy or with the need for the space, for the warehouse space. That's one thing. Second thing, which is very important, we are working with the market leader in terms of development. So that's another factor which kind of guarantees the quality. And I think in terms of investors, what we are promising to investors and what we want to deliver, we are talking about, first of all, relatively short time of the investment, because we are talking about 2 years, per asset. Because, Craig, you know this very well, and probably a lot of our viewers know as well, that building a warehouse, it's a fairly quick development.
Right.
It's like building from Lego bricks.
Right.
So building a warehouse then can take something like 6 to 12 months, depending on the size, and then commercialization and sell. So what we are selling to investors, we are looking on approximately 24, 36 months investment per asset.
Right. And I know most investors like this time frame
because it's a foreseeable time frame.
Right.
But also not only from the investor's point of view, but also from our point of view, we can manage cost of building, we can manage the market situation much more closely compared to building a huge skyscraper where the whole process is 5-7 years.
Or a decade in some cases.
In some cases. So that's one thing. And the second, coming back to returns, what we are offering our investors.
Let's say it's 3 years. Okay, let's say 3 years. What can they expect at the end?
We are our promise and our, let's say, aim is to get a 15% IRR for investors in euro net of fees.
Right. Okay.
Which I think, somebody can say, oh, there are better opportunities. Well, maybe there are, but the truth is that if you look in today's market, 15% IRR, backed by the track record, of course, because this is important.
Right. And risk. It's risk. Yeah.
Of course. But at the end of the day, if you look at it, 15% with the interest rates comparing to the interest rates in euro, it's a very interesting return. And of course, 15% is what we want to deliver. But we are also saying there is no cap.
Right.
So if we will deliver more, it will be beneficial for everybody, for us, and also for obviously, most importantly, for the investors.
Well, I would imagine, too, for investors, when you're looking at a warehouse next to Heathrow, or you're looking at a warehouse in Austria or France, it seems pretty like a very low-risk business or very low-risk investment.
I think, as you said before, this is a product which obviously there is some risk. However, I think that the asset that we are focusing, geographies that we are focusing on, and most importantly, we are providing investors with a diversification. And I think that diversification is a key in every investment. If you can provide diversification, good location, and on top of this interesting return, I think this is a good combination for a success. That's why our first fund, which was our first fund, and as I mentioned at the beginning, we started raising it in a very difficult market situation. Proven that we managed to do it because we raised it in 10 months
and invested it correctly.
Exactly.
So what? what kind of investors are you looking for now? I just asking because I remember before when you were raising 40 or 50 million, you said, look, we're looking for individuals, even as low as 250,000, if I remember right.
Correct.
I imagine if you're raising 100 million, 250,000 is you must be, I guess you're raising the limits, but let us know what type of investors are you aiming at here?
So basically, I would say, of course, we are looking for any type of investors. So we are open also for the individuals.
Still investors, still smaller individual
Of course,
investments.
if the investor is interested, there will be a space for him. However, correctly as you mentioned, raising a much bigger fund, we need to approach it in a different way. That's why we are now focusing, first of all, mainly on Western Europe money, but not only Western Europe, because we are also looking on money from the Gulf, from the US,
right,
from the UK,
Asia, I imagine.
Asia. So that's one point. So we are kind of expanding the geography of fundraising. Secondly, we are looking a lot for family offices, multifamily offices, and also more institutional investors, because then the ticket size is completely different. Also to mention, the second fund has got ISIN number. ISIN number is a number used by private banks in order to allocate the portfolio of their clients, which, in other words, not to getting into too much details here, basically it allows us to work with private banks, Swiss private banks, which we are now working with,
right?
Because this allows the investors who's got an account in a bank to invest into our fund, but the bank doesn't loses the assets under management, which is important element.
For sure, because now the banks are probably a little bit happier talking to you, because with this before it was they were losing the money out of their accounts, really, and they're making something on this too. So now the banks, the private banks can actually benefit by working from you, or with you, because before it was really they were losing the money if they recommended you.
Yeah, of course. So before, if the investor client wanted to do it, the banks had to obey. But of course, as you clearly say, it's easier.
Right.
It's easier for them, and I think it's also easier for us, because the whole process gets more automated.
Right.
Which is better. And again, we can start focusing on bigger tickets and bigger investors, because at the end of the day, we will set up fund number 3.
Yeah. Right. Yeah.
And we will be raising more. So we need to kind of step up the fundraising and go up in terms of investors.
Now, with institutional investors, I guess the first fund, it was sort of no sense, because they wanted to see more history. Yeah.
Yep.
So now with the second fund, is that enough? Let's say enough history, enough exposure to be getting institutional investors where they're like, okay, you're an institutional entity we want to put money into. Are you at that? Is it this stage?
I would say probably closer to ending the fundraising for fund number 2. And we already have discussions with number of institutional investors, which they are saying, listen, let us see a little bit closer to the end of the fundraising,
right?
And then we can come in. But yeah, definitely, this is the direction. Yeah. This is the direction to work with bigger tickets, bigger investors. I would say that fund 2 is somehow in between.
Right.
So I would say we are in between still the individual investors and more institutional investors, with a very big focus on family office investors. I think that Fund 3 and going forward will be definitely, the focus will shift from individual investors, which, by the way, we'll never close ourselves.
Right.
Because that's where we kind of started. And we believe that it's having more investors, it's also beneficial. But definitely the shift will be to move more into institutional investors, because I don't want to say it's easier than individual investors, but it's different.
Yeah.
But definitely size-wise, ticket size-wise, and fundraising speed, etc., it's on a completely different level.
Well, Fund 3, you might even start with some institutional companies, I would imagine, with some bigger investment. Well, Well, great, very exciting things going on. Now, you talked a little bit about we talked about Austria, we talked about Spain, or sorry, we talked about Austria, and we talked about this investment that you're doing in France
Yeah.
now. So, what are the next the next funds that you get in, or the expanding the second fund? What other countries are, let's say, your top focus now?
So definitely, we the Austria and France, those two projects are done.
Mm-hmm.
Are done in a sense that we secured the land,
Okay.
and we will be moving forward with the financing, and also moving forward with developing those assets. Another target that we are looking at is the Netherlands.
Okay.
Another one is Sweden.
Mm-hmm.
And definitely, we would like to do something in Germany.
Right.
That's
Okay.
the market that we would like to have our presence. So I would say, yeah, core Western Europe.
Mm-hmm.
However,
The big names.
the big
Yeah.
names.
Mm-hmm.
However, we are looking on loads of projects and pipeline.
Mm-hmm.
The pipeline is big, so we are not closing ourselves, because it's all about an interesting project that at the end of the day the location will be good, which obviously in real estate, location.
Right.
Secondly, it will be able to be built and commercialized and sold within the anticipated 24, 36 months, which we are promising to our investor. And last but not least, we are also looking on the IRR,
Right.
because in order to get to 15% plus IRR in euro, which we are after the fees, which we are promising our investors, we need to look on higher number, because obviously you need to have a buffer for during the development. So these are, let's say, the things. But coming back to locations, there is a lot of interesting locations. The Netherlands, Belgium, Germany already mentioned, Scandinavia, but also UK, Spain.
Right.
So yeah, we are all over Europe, and we are looking on the best projects, because as we said, we want to deliver to our investors time, IRR,
Right.
but also we want to give them and provide them with diversification.
Right.
So this is the key part.
Now I wanted just to ask, because we are in Poland. Let's say not a Polish fund, but you're based here in Panattoni. We're doing the interview here from Poland, which of course next interviews it sounds like we're going to do in Austria and in Spain before MIPIM. So it'll be some more news to come out. But I look at some of the projects for Poland, and Panattoni. I think we announced it 2 weeks ago. They had just sold these 3 warehouses for 100 million or 110 million. It seemed like a lot. Now, what is the reason? Because I think the rates of return are pretty high in Poland and pretty good investments here. Is it just the investors not looking interested in Poland anymore? Or what's happening with it? Like, why Western Europe? Why not a couple in Poland and Czech and maybe the Baltics? I don't know.
I would put it this way. Poland fundamentally is a very good market, and I think as you mentioned, the latest example of Panattoni selling 3 assets in Poland to a foreign investor.
Must be some profit in there somewhere, I would imagine.
Definitely, it's these were the good projects. These were the good projects, and definitely the investor made the decision to buy them. So he put thought into the process. However, from our point of view, from Newport Logistics Fund point of view, because we want to focus on raising money from Western Europe, mainly, but not only, then doing assets only in Poland would be more difficult from investors' point of view. So and it also probably applies also to investor base that we are looking from Poland. They are also looking for diversification, not only in terms of the asset but also geography. So that's why we are focusing on Western Europe, which again can be also very profitable if you are choosing the right projects and right locations.
Yeah, you're right. I see it is a trend. You look at Polish investors, Czech, Hungarian. they're all looking abroad. You know, so you look at some of the bigger projects that it's interesting. A lot of the Western European companies are coming here, and a lot of the, I guess it's the exposure, right? If you're a Polish investor, you're like, look, we've got a lot of exposure in Poland. Let's diversify a little bit, you know. And why not go, best to go through you guys who they know and trust, right? So great. So our next event, our next meeting will either be in France, or in our next interview will either be in France or Austria, or maybe one of the other countries.
Or maybe
that
somewhere else.
You never know. So, Szymon Ostrovsky, our CEO of Newport Logistics Fund, thank you for joining us this Monday morning after Expo Real.
Thank you very much.
Having time, and we will, we'll meet again in either probably Vienna or in Paris or somewhere nice as well, and find out the next steps of the fund and how it's going.
Correct. Thank you very much, Craig.
Great. Thanks for joining us.
Thank you.
Thanks. Click here to subscribe to the Coffee with Craig show, and don't forget to share it with your friends.